Okay, let's continue our agenda. Howard, please join us here. What's a good return for a fund? We have some people coming from finance and investment. What is that? 10% a year? 20%? What do you guys consider a good return for a fund? Let's say 20%. Please raise your hand if you believe that 20% is a good return per year, right? How about 50%? Who thinks that 50% per year is a good return? Okay. Second question. Who in this room has taken an Uber in the last 30 days? Please raise your hand. Raise your hand if you've taken an Uber. 70%? Problem. Okay. So just to introduce Howard. Howard, among several other things, was the co-founder, president, CEO of Renaissance Technologies. Between 1994 and 2014, the annual return rate of Renaissance Technologies was around 72% per year. In the 2020s, it's north of 75% per year. In 2008, when we had the crisis, it was 100%. And Howard was one of the first institutional investors of Uber. It's a pleasure to have you here, Howard. We meet quite often online, but it's the second time we meet in person.
And I'm very pleased to be here in person. And I'm very pleased to be talking about what Seldor is talking about. It is true that we started Renaissance after an academic career at Cornell and Caltech and the University of Pennsylvania. I left the universities. I resigned my tenure. We had a great return at Renaissance. That's a terrific return. First round Capital 2, our fund in 2008, returned an MOIC, as we talk about in the venture industry, of 50. That is, we returned, Yale University put in $22 million. They said, we like you guys, seed stage investing sounds interesting. We can put in 20 million because your fund is so small, and it won't move our needle because we have a $15 billion endowment, but we'll do it. By 2021, they had gotten $1 billion back. Because Uber did start in our San Francisco office. We were the first investors. So we also, after turning it down, had our partner bring his 8-year-old son to pitch us on a deal called Roblox. I don't know how many of you have kids who know Roblox. So in the end, Roblox actually returned more than Uber to the fund. So that was a fund for the ages. In that fund, and I don't know if this is who you were referring to, but in that fund, we did Planet.com, which was one of the first companies to do private satellites, building them in our San Francisco office, in their San Francisco office, launching them and launching hundreds of them, actually, and very good. In 2008, with some friends that I knew, Peter Diamandis, among others, we invested in zero gravity. I don't know, it's hard to see, but I've now taken 9 zero gravity flights. So the old vomit comet, although we try to limit the number of parabolas so people don't vomit. NASA found that it was usually after 25 parabolas that people started to throw up. So, I like to start things. So I started Renaissance, did 10 years there, did 10 years investing on my own, 10 years at First Round, and in 2016 with Eduardo Saverin, the co-founder of Facebook, and another fellow, Raj Ganguly, we started B Capital. We now have about $7 billion under management. And in our latest early stage fund, we're doing space.
Why?
Because, well, first of all, we have a budget which we always call moonshots. So in our first fund, the moonshots were robotics and brain-computer interface technology. 3 of the founders of Neuralink left Neuralink, created a company here in New York called Precision Neuro. But I insisted in this new fund, which we just started investing in, where we're going to do real space. And so we've just agreed to invest in a company called Starcatcher. And the Starcatcher concept is to put a power grid in orbit to beam more sunlight onto the solar panels of the existing satellites. So no retrofit, nothing. But if one of your panels is not working as well as you'd like, or if you want to put up NVIDIA 200 chips that take huge amounts of power and you can't launch that much weight for the batteries, we will beam down from the sun in exactly the right wavelengths, additional power onto your solar panels. So most solar panels can take 2 to 8 times the sun. They get one sun now from the sun. We'll try to give them many more of those and charge them appropriately. I think you're absolutely right. It's all about economics. I mean, that's and building a great economy up there. We're looking at solving another problem, which is space junk. Most of you who are familiar with space know how big a problem that is. We're looking at a company that can deal with the very small stuff, the millimeter, 2 millimeter junk. There are other companies looking at bigger junk. So lots of exciting things happening in space. And partly because, just like you, I grew up with Star Trek, and I love Star Trek, and then Star Wars, and the Asimov books, of course, I, Robot, and the psychohistory was something we always would love to do and see. When we learn chaos theory and mathematically, we realize that it's kind of hard to do it in the way the book predicts. But one thing about science fiction is we keep getting shown that it becomes science fact. It may take 20 years, it may take 50 years. 20,000 Leagues Under the Sea took about 80 years to get a nuclear powered submarine under there. So anyway.
So 2 questions here, Howard. One about venture capital and the other one about capital markets in general, right? You have been seeing this through your career, the evolution of venture capital. What is next? What are the things how are you seeing the industry evolve? And then I'll have a follow-up on capital.
Well, the industry, it's not so much evolution as cyclicality. So the first venture capital funds in the 70s, the famous ones like Kleiner Perkins, were very small funds, $7 million funds. And they really were focused at the early stage and helping companies grow. Then we became in the 90s a giant industry because of the internet bubble. And people started raising billion-dollar funds. It's very hard to have a billion-dollar fund return a lot of money because the mathematics is quite simple. You have a billion-dollar fund, you want to return 5x, then you have to return $5 billion. If you own 10% of the companies you invest in at exit, you have to create $50 billion of market value. And I don't know what your fund's going to invest in, say it's 50 companies, so you have to create $50 billion companies, which is not going to happen. You maybe create a couple that are 8 or 10 billion if you're lucky. So it's really hard, the economics. So what's happened is we cycle from very large to much smaller funds. And what happened a lot in the last 5 years is a lot of smaller funds that are starting to do very well. And a lot of those started by women and underrepresented minority people who couldn't sort of break in the thing. And I think that's great for venture.
Do you see any trends or any specificities related to deep tech, like hardware? We see a lot of investment going to pure digital things. How about deep tech, science-based?
So we're starting to see a lot more of the deep tech. Defense tech, Anduril has shown that you can make real money in defense tech, Palantir. So all of a sudden we have funds, Deep Future here in New York and 8090 out in LA and a bunch of others that are focused on what they're calling deep tech. We have funds that are focusing on space technology now, and are at sort of funds in the 30 to $100 million range. We haven't seen the $1 billion space tech funds yet, or the deep tech. But there's much more acceptance that if you have a world-changing technology, whether it's a brain-computer interface, whether it's robotic weaponry, for example, or whether it's interesting things in space, you can have a huge win. We've looked at space mining, creating tritium. So people want reactors. You want fission reactors. You want fusion reactors eventually. That needs tritium. Okay, right now we don't produce enough on Earth, and you could do it on the moon, and it's $20,000 a gram, and if you can get it back from the moon, you can mine it. And the question is, can you get it back? But we'll see that in the next decade.
Talking cycles, right? Venture capital was seriously hit in recent years, right? It was very hard to raise money for startups and for funds, right? How do you see this evolving in 2024? You are one of this, probably a very rare case of someone who has done venture and capital markets
Mhm.
fast trading. So how do you see the capital equation for venture capital?
Well, I think that the venture capital is driven by exits, and we haven't had the exits. The capital markets provide the exits, which return the money to the LP so they can go into your next fund. In the 90s, if I invested $1 million in a venture fund, I expected I would be out of pocket 500,000, and then the companies that went public would pay for the next 500,000 of commitments. So somebody could put some $1 million every 2 years. In the late 90s and today, if I invest $1 million in a fund or commit $1 million to a fund, I expect to be out of pocket $1 million before the exits come. The exits are just taking much longer. I think that will open up in 25. I don't think it'll happen this year because of the election and the uncertainties and so on. But I think after this year in 2025, we're going to start to see a resurgence of IPOs. There's another thing that's changed. In the 90s and 80s, we used to have small tech IPOs. You know, the Microsoft IPO is a $300 million IPO. That was the value of the company. And the reason it changed dramatically was a change in the stock market rules. When I grew up, we traded stocks in eighths. So, the bid-ask spread was 12.5 cents. That 12.5 cents was shared between the two brokers. Used it to create research conferences and things to bring investors in. Because if you traded 1 million shares a day, you generated $3 million a year in commission. So you took a company like Microsoft public, you got $3 million a year in commission, and maybe that one was even more than that. And so you held conferences 4 times a year, and you brought in small investors, and they kept all these tech things going. Well, then in 2001, we had the Big Bang, and now the trading commission is 1/10 of a cent. So 1/10 of a cent. So that $3 million is now basically $3,000. Mm-hmm. So only bigger companies can successfully go public, which keeps companies private longer. More demand on the venture industry.
Maybe we could take 1 or 2 questions from the audience. So if you have a question, please let us know. Let me tell you a secret. If any questions, let me tell you a secret. One of the most exciting things that I did in my life was to fly 0G. Thank you for that.
I'm really pleased you did. I take all of my grandchildren up, and I have one more to go up, so I'll go up probably in the summer or fall, and I love it. I have about an hour of 0G experience. It's in 50-second chunks, to be fair, but it's still pretty great. And by the way, we're investing in other moonshot tech. We have a quantum hardware stuff. Yeah.
Hello, Roberto. What a wonderful meeting you've organized here. And hello, Howard. We've talked on the phone as well.
Yeah.
My question is, what are you currently focused on in terms of your future investments, your future themes, and things that are exciting to you?
Well, first of all, the thread that has run through my career, academic and professional, is a lack of focus. I mean, I love new technologies. I love deep science and technology. So quantum hardware is one I'm focusing a lot on right now. We have one investment based in Chicago. We're starting out with, if it works, it'll start out with 2,000 qubits instead of this kind of 1, 2, 3 that everyone else is trying to do. Space, as I say, we really do believe that the space economy is ready and the world's ready for exits. Planet.com was a decent exit for us. Unfortunately, it ended up with a SPAC, and SPACs have caused all sorts of issues over the air. The other thing I'm personally very focused on is longevity. I want to be around to see these things happen. So I've spent the last 6 or 7 years on both a personal and an investing journey into places that can help us realize, number one, aging is a disease that we can cure. Now, we can't cure it forever. I don't want to live forever. I don't expect to live forever, but we can live a healthier life with less chance of dementia and frailty if we do the right things and take the right medicines and treat our bodies appropriately and monitor it. And that's all starting to happen. And we're seeing a lot of interesting companies in that space.
So building on Peter's question, you are someone who has always been looking at the future, right? And it seems to me that you were there thinking, what's next? Moving from one type of technology, one type of venture to the other. And I want to turn to you. What have you learned throughout your career about that everybody should learn should know if they're in investment or if they are raising money as a startup?
Well, as an investor, my job as a venture capitalist, my kids used to say, "What's your job?" So, and I say, it's very simple. You talk on the phone and you say no, but you have to say no politely so that they'll come to you with their next idea, which you might say yes to. And so the one thing I've learned is always try to be helpful to entrepreneurs, because it's a very hard step for somebody in their life to take to become an entrepreneur. And don't try to crush them, even though their idea is completely idiotic. But what you have to do is find a germ that says, I understand why you're doing this. Here's why we can't fund this at this time. Maybe there are some ways you can move it, but try to be helpful to people in their journey. And the second thing I've learned is you have to skate to where the puck is going to be, as Wayne Gretzky said, right? So, with quantum computing, people say, well, it's going to be 5 years from now. Well, that's great, because that's where I want to be. And I want to find the software companies that are building quantum software so when the quantum hardware is ready, the software companies will be ready. So you really need to have and continue to keep your focus further out. And that's one of the reasons that I try not to age. I mean, I want to have that youthful exuberance for what's going to come next. And, I spent time at the Rand Corporation back in the late 60s and early 70s, and Rand had some wonderful views of the future back then. The internet came out of the Rand Corporation in many ways. They were able to think, what if all of our basic assumptions about the way things are going are wrong or get changed? What do we do then? And that could be 5 years or 10 years or 20 years from now. So that's what you have to do, is keep a mind that looks much further out.
If you had to choose one single thing, one technology, one type of venture to focus on from here to the future, what would that thing be?
AI. I mean, there's no question that artificial general intelligence is coming, that computers will seem to be smarter than us. They won't actually be smarter than us, I don't think, but they will seem to be. They will actually be smarter than us, but that's 100 years. In the next 20 or 30, they won't be. But I think there's so much promise in what we're seeing in the AI world that I'm really excited by that.
Howard, it was truly a privilege to have you here today. Thank you so much for coming. I know that you'll be around for some time.